Yo, what's up, guys? I psyched you out. I came early today. Wait, I arrived early today. That sounds better. That sounds much better. All right. What's going on, guys? What's going on? Good evening. All right, so probably won't be too long of a stream tonight. We got to go live on the Patreon shortly after this is over. Open mic Fridays, guys. Open mic Fridays over on the Patreon. It's going to be a good time. It's going to be a good time. Hope you guys are jacked up, jack stacked, and fanny packed. Let's go, baby. Okay. A lot of DCA opportunities across the board right now, guys. A lot of stuff you could be filling your bags on. Weekly, everything looks pretty juicy still, though. But good DCAs, guys. Like I said, we're climbing a little bit. Bitcoin's climbing a little bit. We're back up to $84,289. We got as low earlier today as 83,600. Are we going to continue downwards? Yes, I believe that we will. I believe that we will. I know there's a lot of people out there who don't think we're going to. I think we will. I will gladly be wrong. Believe me. All right, let's see what's going on. Ryan, my dude, hit the like, guys. Yes, absolutely, guys. Smash that like button. Let's beat this algorithm into submission. Mario, what's up, buddy? Let's get this money. Danny's in the house. Good evening, good evening. Beebs, my dude. Otaku, man, you jumped over quick. I was just listening to your live stream in the background, and you signed off, and then boom, here you are. You're everywhere. We're ready for the dip. Absolutely, brother. Danny, I'm tired of this waiting, but also excited about the next few months. It's bittersweet. Yeah, 100% agree. Yeah, me too, man. Listen, I'll be excited when I can deploy my capital on this next leg down. That's going to be absolutely epic, man. Epic. Guys, as always, make sure you hit the like and subscribe to the channel. Helps the channel grow. It doesn't cost you anything. So, yeah, it'd be awesome if you go ahead and help us out. That'd be absolutely amazing, right? It would be super fantastic. Do it now. Do it. Attila, open mic Fridays. It's going to be a fun night. Hell yeah, guys. Listen, if you've never experienced open mic Fridays over on the Patreon, you're going to have to get over there and check it out, guys. It's a fantastic time. It is an amazing way to spend your Friday night. Educational, fun, hilarious. You meet a lot of fantastic people. It's an amazing time, guys. We open it up, group Zoom call. It's absolutely fantastic. Check it out. The link is in the chat. It's in the pinned comments. It's in the description. You really can't go wrong. Danny, let's get this dip over with so we can get some upside chaos. Absolutely, man. Let's rip it. Paul, my dude, thanks for being here, brother. I appreciate you being here every single stream, Paul. You are the man. Lizzie, hello to all my crypto wieners. I have to say that that is my favorite word. I even got my friend to customize a neon light that says a wiener for Christmas. Get over to the Patreon. Great people there. Yes, absolutely, you bunch of wieners. I agree. Bring on the crypto chaos, ya boy. That's what she said. What's up, my fellow weirdos? Gamma Goddess, there she is. Hope everyone's holding diamond hands, DCA, and or going shopping, because I sure am. Let's get this money. Looking forward to the Patreon later. See y'all there. Absolutely. Zebek, let's go, baby. Steve, watching over on X. You the man, Rob. Keep preaching. Thank you so much, brother. I appreciate you guys who watch over on X. Make sure you're following me on X, guys, because listen, I drop exclusive content over on X that I don't drop on YouTube. So if you want to get every little bit of everything I put out there, I share a lot of content on like Forda and Moonwell and Nadix and all kinds of other altcoins that we absolutely love here on the channel. All kinds of picks that we have. I share a lot of updates and stuff about them over on the X account. So make sure you're following me over there, guys. Okay, so let's get into what's going on around the markets. But before we do, guys, as we always say about this time, Quick shout out to the channel sponsor, Decent Self-Custody Wallet, guys. Make sure you're getting yourself one. Do not leave your crypto hanging out on an exchange, just begging for a hacker to come along and scam you out of your hard-earned money. Nothing worse than making life-changing wealth in crypto only to wake up the next day to find your account has been drained. And I promise you this, there is no recourse for you if you get hacked. No exchange is going to reimburse you. Your money is just gone, okay? So put it on self-custody wallet, guys. Fingerprint technology, absolutely phenomenal. Use our link down below. Get an amazing deal. Okay. What do we have? Whew, what do we have? Yamaha, good things come to those who wait. Yep, absolutely, man. 100%, man. 100%. All right, so landmark FDIC crypto guidance. Banks get green light for digital asset activities, something that never would have happened under Gary Gensler and the Democrats. Check it out. Exciting news for the crypto world. The U.S. Federal Deposit Insurance Corporation, or FDIC, has just dropped a significant update, potentially opening doors for banks to dive deeper into the realm of digital assets. This vital guidance from the FDIC could mark a turning point in how traditional financial institutions interact with cryptocurrencies. Are you ready to explore what this means for the future of finance and crypto adoption? Well, it doesn't matter if you're ready, because I'm taking you there, right? In a recent announcement that has sent ripples through both the banking and cryptocurrency sectors, the FDIC has clarified its stance on banks engaging in crypto-related activities. According to a statement published on their official website, institutions regulated by the FDIC now have a clearer pathway to participate in the crypto space. The key takeaways: banks can now engage in permitted cryptocurrency activities without needing to seek prior approval from the FDIC. This is a significant shift from previous uncertainties and could signal a more welcoming regulatory environment for crypto within traditional finance. Right. Why is abolishing customer reputation risk a win for crypto regulations and innovation? In a move that many in the crypto industry are celebrating, the FDIC also recently abolished the customer reputation risk assessment criteria for banks. This had been a point of contention and criticism, often viewed as a tool that could be used to stifle the growth and development of the cryptocurrency industry. Let's understand why removing this criterion is significant for crypto regulations and innovation. Eliminating subjectivity. The customer reputation risk was inherently subjective and vaguely defined. The lack of clarity could lead to inconsistent application of potentially discriminatory practices against businesses or sectors perceived as risky, including the cryptocurrency industry. Leveling the playing field. By removing this, the FDIC is arguably leveling the playing field for crypto businesses seeking banking services. It reduces the potential for banks to deny services based on perceived reputational risk associated with the crypto industry. So basically, they're getting rid of choke point 2.0 because we have a new administration in office. You absolutely love it. What are the potential benefits of this new approach? This dual announcement from the FDIC, the crypto guidance, and the removal of the reputation risk presents several potential benefits for both banks and the broader cryptocurrency ecosystem. Increased clarity, boost for crypto adoption, innovation and competition, and mainstream integration. Are there challenges and considerations ahead? Let's have a looky-loo. While this news is largely positive, it's important to acknowledge that challenges and consideration remain as banks navigate this evolving landscape, defining permitted activities, risk management and compliance, evolving regulatory landscape, and consumer protection. Actionable insights. How can banks strategize for crypto engagement, conduct thorough due diligence, develop a phased approach, invest in expertise, prioritize compliance, and engage with regulators on a regular basis? Conclusion: a bold step towards crypto integration. The FDIC's latest guidance represents a bold and encouraging step towards integrating cryptocurrencies into the traditional banking system. By providing clarity and removing unnecessary barriers, the FDIC is signaling a willingness to embrace innovation and allow banks to explore the potential of digital assets. While challenges remain, this development is undoubtedly a significant win for the crypto industry and could pave the way for more inclusive and dynamic financial future. If you ask me, this is more of a win for the banking system and the traditional finance system than it is for crypto. It is a win for crypto. However, we just covered earlier today how decentralized finance projects like ZBEC are eliminating the need for middlemen, i.e. banks, right? When you can just load your crypto, stable coins or otherwise, onto your ZBEC carbon card that is accepted anywhere Visa and MasterCard is accepted. You can use it online, in stores, wherever, right? You eliminate the bank, and also the carbon card is zero fees, right? So the banks aren't getting your fees. So this is a way for banks to try to get on board and still get your fees. However, this is just a band-aid, in my opinion, for the broader picture for decentralized finance, right? Banks are not going to be able to continue the way that they are when we're still in the early phases of decentralized finance adoption. When it becomes extremely easy for the general retailer to be able to load their money onto, say, their ZBEC carbon card, just as an example, that's accepted, used as a debit card, used at any ATM, anywhere Visa and MasterCard is accepted, blah, 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 blah. And you don't have the worries about the bank freezing your money, the bank telling you when you can take money out and how much you can take out and all these problems. People are not going to use banks anymore. When they can be their own bank, they're not going to continue to pay bank fees, right? It doesn't make sense. Whew, Danny. Wow, 1 year. We had a year already, Danny? Holy smokes, brother. And he follows up with a super chat, showing gratitude for sharing invaluable wisdom. Hey, Danny, I appreciate you, brother. I appreciate you, man. Thank you so much. Thank you so much. Johnny. Rob, I tried sending you ZBEC tokenomics burning mechanism breakdown on X, but it wouldn't let me. It kept saying failed, but it's on my X. I'll have to have a look, Johnny. Can you tag me in it? Try to tag me in it. Isaac, what's up, my dude? Good to see you, brother. Good to see you. Jared, what's up, man? You're making my work day easy with all these day videos, Rob. Keep it up. Keep it going, brother. Absolutely. That's the plan, Stan. Marvin, over on X, to the moon and beyond. Thank you so much, brother. Thank you so much. What's up, fam? Murmula, what's going on, man? Good to see you. All right. What else do we have on the docket? Let's have a looky-loo. So we got this spot Bitcoin ETFs report 10 days of continuous inflows reflecting sustained demand. I take a drink. You guys are tiring me out. U.S. spot Bitcoin ETFs experienced $89 million in net inflows on Thursday, marking the longest streak of positive flow since December 2022. This brings the total inflows over the past 10 trading days to $1.06 billion. Although this figure is notably smaller than the single-day inflows of $1.2 billion recorded on January 17th, analyst Ming Zheng from Presto Research noted that while institutional interest in Bitcoin persists, the current inflows are considered relatively modest compared to the earlier in the year. This suggests that while institutions are not aggressively risk on, there is still demand for Bitcoin exposure in the markets. Fidelity significantly contributed to Thursday's inflows, attracting 97.14 million, while BlackRock's IBIT saw nearly 4 million in new investments. Conversely, Invesco BT Co reported outflows of nearly 7 million, and Wisdom Tree experienced a $5 million decrease in assets. The volatility in both cryptocurrency and broader equities markets has been influenced by recent policy announcements from the US Mr. T regarding tariffs and foreign countries. Despite recovering some investor confidence, ongoing uncertainties continue to impact market sentiment. In a contrasting trend, spot Ether ETFs have recorded net outflows on all but 2 days since February 20th, highlighting a divergence in investor interest between Bitcoin and Ethereum. As the latest reports, Bitcoin is trading at 86,000. Nope, it's at 84,000 now, reflecting a 1.5% decline in the past 24 hours. Ethereum has fallen 4.7%, currently priced at $1,929. The continued inflows into Bitcoin ETFs illustrate a sustained, albeit cautious, demand for crypto exposure amid fluctuating market dynamics. Juan, do you think if we load up our carbon card with 10K and use it, that would be a taxable event? No, because you're not investing in anything. You're just moving your money over to the card, right? I mean, you'd have to pay tax if you're spending your crypto, as opposed to, like, if you're spending your stable coin, then no. But if you're spending cryptocurrencies, then probably yes, right? Like if you're spending your ZBEC or your XCN or whatever, right? Then yeah, because you'd be taxed on whether you were up or not from your initial purchase of the ZBEC or XCN, right? I tried tagging you in it. If anyone else can get it to you. That's weird. Yeah, I'll have a look, Johnny. I'll have a look, man. At Disney World with the family, hit me up if you're in Orlando. Meet up and talk crypto. 100%, brother. 100%. What's up, bro? Sav's in the house. Thanks for the one-on-one on Sunday. Great talking to you again. Absolutely, brother. My man, getting my comment in for the channel. Thank you so much. Yeah, we got to beat out that algorithm, guys. We got to beat it into submission, right? So we got to continue to like, comment, subscribe, because it's not working with us right now, guys. It's not working with us right now. And that's not very considerate, in my opinion. So, yeah. All right, what else do we have? A couple more things to get into here. So we got this here, Bitcoin price tag. Arthur Hayes says liquidity is the trigger. Bitcoin sits at 87. No, it sits at 84. We'll scroll down here. In a recent YouTube interview, Kyle Chassis, he waived a price fixation. The real driver is fiat liquidity. According to him, dollars, euros, yen, and won slothing through the system dictate Bitcoin's fate, not some arbitrary target. It's a market lens that flips the script, and Hayes has the data to back it up. Arthur Hayes doesn't care if Bitcoin hits a round number. He told Chase, we'll say Chase. It's about the expectation of what fiat liquidity growth has to happen to justify this price versus the reality. Translation, how much cash do central banks and politicians pump out? That's the pulse of Bitcoin's price. He's not wrong. On March 27th, yesterday, with Bitcoin trading at $87,000, he's not wrong to shift focus. The coin's dip in a day shows volatility, but Hayes sees a bigger picture, global money creation. Hayes pointed to December 2021 for proof. Federal Reserve Chair Jerome Powell hinted at a higher interest rate shifting during last month's meeting. Bitcoin stalled, a bear market followed. Liquidity tightened, and the bull run, peaking with market cap over 1 trillion, fizzled out. Hayes connected the dots. Less fiat flowing means less fuel for the crypto. Obviously, right? That's why I keep telling you guys that Bitcoin's price is tracking the M2 money supply, right? Arthur Hayes isn't shy with predictions. Earlier this month, he pegged Bitcoin's price at $110,000 before pulling back to 76.5. Right? The Fed's pivot from quantitative tightening to easing, more dollars in play. Long term, he's eyeing $1 million. No timeline, no government crutch needed. Just saw fiat growth and all about the money trend. Here's why Hayes gets Here's where Hayes gets cryptic. He told Chase Bitcoin will hit interesting numbers. I can't say the word. $110,000 and beyond. Then fiat creation will need to go insane to sustain it. When that happens, he's out. It's probably time to sell everything, he said. It's not a panic call, it's a liquidity gauge. If central banks flood the system too fast, Hayes sees a top. For now, $87,000. We're not there yet. Hayes's take isn't just contrarian, it's practical. Traders chasing $100,000 miss the forest for the trees. Fiat liquidity offers sharper lenses. Powell's 2021 pivot proved it. Policy shifts move markets more than memes. With Bitcoin's price down 0.53% in the last 24 hours, Hayes forecasting $100,000 soon. His focus on cash creation could redefine how analysts track crypto. Like I've been telling you guys, we're going to dip down through April. We will hit $110,000 through May and June, in my opinion, which is going to send altcoins up with it, right? So that's why I am personally buying the dip as much as I can through the month of April. What else do we have? Jared, so I thought I was getting the carbon card, but it ended up with the virtual card. So I don't know what happened, but yeah. Connected my wallet, put a couple bucks in, and it took me to a random website. Oh, man. That's rough, brother. That's rough, man. Market shifts prompt unexpected price movements. Are they unexpected, though? Are they? Bitcoin hovers around $85,000. This week's gain have come to a halt. Following the PCE data that fell short for traders, high hopes. Amid this backdrop, market participants are left pondering whether a surprising rally could occur, even as skepticism runs high regarding recent short-selling liquidations. Ripple XRP finds itself in a favorable position historically, although its price does not fully reflect this. Key developments, such as conclusions to the legal issues and upcoming stablecoin regulations, have positioned the coin positively, further aided by potential support from the U.S. political figures. Why isn't XRP's price rising further? Despite these favorable developments, the XRP price remains stagnant due to ongoing trading war tensions. With new tariffs expected to be announced soon, this has left market participants anxious and uncertain. Yes, from what I understand, Mr. T has introduced pharmaceutical tariffs today now. So yesterday was automobile tariffs, and today is pharmaceutical tariffs. If XRP drops below the critical $2.20 support line, it may quickly reach $1.98, benefiting short sellers ahead of market openings. Historical trends indicate that downturns often precede significant recoveries, sparking hope for traders. Low trading volumes over the weekend, combined with the impending April 2nd developments and rising PCE data, hint at the possibility of an unexpected surge in cryptocurrencies. We don't care about Chili's and Solana, so I'm not going to get into that. All right, one last piece of news to get into here, guys. So the SEC ends Crypto.com investigation without enforcement actions. The U.S. SEC has officially ended its investigation into Crypto.com without filing any charges. The inquiry began after the company received a Wells notice in 2024, which typically signals potential enforcement. However, the agency has now chosen to close the case. Of course, good old Eleanor Tourette with the scoop. Crypto.com took legal action against the SEC in October. The company presented evidence showing that the SEC exceeded its legal authority when it tried to categorize many crypto tokens as securities. The SEC officially abandoned their charge against Crypto.com in December when shifts became evident in their regulatory tactics. This case is one of several dropped by the SEC in recent months. Legal actions against major platforms like Coinbase and Kraken have also ended. The agency withdrew its appeal in the Ripple lawsuit and reversed crypto accounting guidelines. These decisions reflect a changing direction under the SEC chair, Paul Atkins. Atkins has stated that building clear regulations for the crypto sector is a top priority. Lawmakers have raised questions about the past industry connections, including his links to the collapsed exchange FTX. Despite the scrutiny, the new leadership has taken steps to reduce regulatory friction with digital asset firms. Crypto.com, which serves over 140 million users globally, now faces fewer regulatory hurdles. The resolution of the SEC probe removes uncertainty that could have impacted the operations. With the investigation closed, the company is moving ahead with its business plans. Crypto.com has entered a new collaboration with Mr. T Media and Technology Group, TMTG. The two firms have signed a non-binding agreement to create financial products under the TruthFi brand. The initial focus is on developing exchange-traded funds that blend cryptocurrency with traditional U.S. sectors such as energy. TMTG's involvement in financial services marks a new direction for the company. Although full product details have not been released, both firms are preparing for future announcements. The deal highlights a growing interest in combining digital assets with mainstream finance. With the SEC case closed, Crypto.com is no longer under legal pressure. The company can now proceed with fewer barriers as it expands. The recent shift in regulatory enforcement signals a new chapter for crypto firms opening in the United States of America. Big things popping, little things stopping. You love to see it, guys. You love to see it. Lions Den says, join the Patreon, you weirdos. Absolutely. Or as Lizzie would say, you wieners. Check it out for yourselves, guys. Listen, we're going to be live over on the Patreon in about 20-25 minutes. I will see you guys over there. It's Open Mic Friday, guys. If you've never experienced it, get over there and listen. Serious moment. If you're new to crypto, guys, okay, get over to the Patreon. Schedule a one-on-one coaching call with me personally. Let me help guide you through this, making sure you're not too over-diversified. Maybe you're holding coins you bought in 2021, 2022, 2023, right? You don't know what you're doing. You don't know whether you're going to be holding too long or when you should be selling, if you're going to sell too soon. I can help guide you through all of this, guys. We have one of the largest communities in crypto. Come on over, book your one-on-one with me. Let's have a look at your portfolio. Let's get you pointed in the right direction. We have live streams over there every single night. And you can also be a part of getting in early on my picks. I drop picks in there almost every single day. So check that out as well, guys. We have made a small fortune on a lot of these picks. We made a 3,000% return on XCN. We're expecting massive returns over on ZBEC. Guys, listen, just the other month, we helped 28 people hit seven-figure portfolios, okay? And we're looking to continue that streak going on into April. So jump aboard, guys. Let's help get your portfolio pointed in the right direction. Book your one-on-one coaching calls. Let's get this going. Click like if you like this video. Click subscribe if you really liked it. And also get yourself a decent self-custody wallet, guys. Sponsor of the channel. Not your keys, not your coins. I'll see you guys live on the Patreon in about 20-25 minutes.